I see it's a small cap company and the world is getting relatively richer, right? Like on a big scale, we are all getting better off.
For some reason, I just haven't, gotten that I want to own this company. And I think the reason for that is, if we see tougher and longer bad economic conditions, people might sell. So debt is really expensive at the moment. A large portion of their phase two funding is from debt, which means they're going to have a lot of interest expenses, which they will have to pay back.
Because it's fallen so much, like people are so negative, they're so impatient. Personally, it's not a bad time for me to maybe start dipping my toes. That's just what I'm doing.
Hello everyone, welcome back to another FinMeUp weekly stock watch where we cover the most important stock market news that happened during the week with a real focus on the JSE. We've got interesting companies for you today. It's actually companies, it's not a lot of companies, but companies that's widely followed. As you can see, we're ready for the Masters. So if you are a golfer, let us know in the comments who you think is going to win. If you get it right, then you really deserve bragging rights. So let us know in the comments. Before anything, there's one thing you must do if you haven't done it already. Check the link in the description to the FinMeUp newsletter. We started sending out the newsletters where we cover stock picks, stock market highlights, insights, post of the day, various other interesting and valuable information. So check out that. It is free to join. It's not as useful as the FinMeUp app, but at least you get easy content right in your inbox. Awesome. So let's jump right into it. The first company is Gemfields. I actually own a little bit of Gemfields, just for a value play. It's their cash is very close to their market cap even. They've had a really, really good year. The previous results were also really good. The company achieved record revenues of $341 million. That's up 32%. The EBITDA also showed strong growth of, an increase of 25%. Free cash flow before working capital was $99 million US. If you look at the market cap of this company, it is still a small cap. So they are sitting on a lot of cash compared to the actual valuation. But there is a reason for that. There is definitely risks involved with Gemfields. That is why it is trading at a very low PE and, if you look at the assets and the cash and all of that, really undervalued. The fact is, it is a mine in areas in Mozambique and so on that is quite risky, political instability and, just a few things. Also, the Gemfield CEO commented that the 2022 year has been remarkable, but also that they are aware that, the economic conditions aren't looking too great, and they don't really expect, if you go through the tone of their voice, they don't expect the next year to be as good as this year. We've seen great auction results from them, and that is why we've seen these incredible results. The share price didn't really do anything after these results. The company declared a gross dividend of $2.88. I'm sorry, 2.88 cents per share in US dollars. So if you put it back to rand terms, it's a dividend yield of close to 10%. That's a proper dividend, but obviously you get the risks. You've got the potential upside. Any comments from your side? Paul, remember Gemfields is rubies and all your shiny diamonds. Well, not diamonds, gemstones, but, interesting company. I own it for the dividend. I might not hold onto this one for too long, but let's see. Any thoughts?
Yeah, I like Gemfields, but it's not without risk. Exactly like you said. You go maybe for the listeners. So Gemfields, they have two big mines in Zambia and Mozambique, and they trade in emeralds and rubies. That's the green ones and the maroon ones. Jonte, maybe in editing you can put a little like emerald here for the viewers. But anyway, so there's a push towards emeralds. Of course, obviously people love diamonds still, but especially emerald is getting very, very popular. And how I see it, I see it's a small cap company, and the world is getting relatively richer, right? Like on a big scale, we are all getting better off compared to basically the whole history of the world. So what do you do when you get richer? You, especially in developing countries like India and China, well, you go into fashion, luxury goods. So you buy diamonds and you buy luxury goods. So I think that's definitely something that's driving the price. But then on the other hand, you have the political instability. There's conflict in especially Mozambique. You have the jihad. They're fighting the government, and this conflict is not too far from the mines. So this is the problem. At the moment, the government is doing a very good job keeping it like the safety and the security measures in place. But if something should happen, Gemfields is going to go down in flames, like quite literally. So that's the fear. But it should be all right. It should be all right. But I think that's why the share price, given the unbelievable results, hasn't really done anything. I think people are very fearful that this might be the case. So I mean, we can chat a lot, but overall, I like the company. Solid, simple business, and given that it's a small cap, I think there's a lot of upside potential.
Interesting. That's a great explanation. The next one is Stor-age. This is actually a fan favorite as well if you go through Twitter and so on. Interesting concept. The business is what the name is, and that is storage. Self-storage. You've probably seen the storage buildings if you've driven on busy roads. But Stor-age achieved a 7.8 increase in distributable earnings for the 6 months ending. The revenue grew by 12.6%, mainly driven by rental income from newly acquired properties. The company has acquired 3 self-storage properties for a total of $470 million, 470 million rands. So, it is investing in future growth, that is for sure. The total value of the storage portfolio now stands at 7.7 billion rand. The company plans to invest in new developments and property acquisitions to continue its growth strategy. So, they are clear. They're going to acquire and they want to grow. The company will pay an interim dividend of 52 cents. Stor-age aims to maintain a conservative approach to the balance sheet and manage while pursuing growth opportunities. This is a company, I wouldn't mind owning storage units. There'll always be a demand. You really get good yields. But for some reason, I just haven't, gotten that I want to own this company. And I think the reason for that is, if we see tougher and longer bad economic conditions, people might sell what is in their storage. They might just want to get rid of it. Or we'll see people buying less goods, so there's going to be less demand for storage if people own fewer goods. We haven't seen that yet. I mean, we can see with, the increase in earnings, increase in revenue, they are expanding. So they're seeing positive signs. They are trading at a low PE, as are all property companies. And, they are paying good dividends. The management is invested in this. But for me, it's something I'm very interested in, and I always get this little hunch that I just want to buy a little bit, but I just haven't done it. Any thoughts on your side, Paul? I know you're the property person between the two of us.
Yeah, I actually love property, but I love physical, like real estate. That's what I'm invested into. REITs hasn't been performing very well at all in the last, literally about 10 years. The 10 years prior to that, it did very well, got a lot of hype. People hyped up REITs, and the last 10 years performed very, very poorly. I think it's maybe even the weakest performing sector on the JSE. But that's not to say that it will continue to do bad. So a REIT, for those of you who don't know, it's like a tax efficient structure for property companies. They pay a lot less tax. So they buy a lot of companies, they lease it out, and in this case, it's storage units. And the rule is that they have to pay 75% of all the rental income out as dividends. So if you're paying 75% out of dividends of everything you get in, you can think to yourself, growing that company is not as easy. And actually performing well share price wise isn't that great. But the flip side is you get an amazing dividend. So you'll see all of these REITs, they're trading flat or even like in negative in terms of share price, but you get a super solid dividend. So you get all the properties, like properties of real estate where you get passive income, but you don't really get that capital appreciation. Well, you didn't for the last 10 years. So yeah, self-storage, I think the crucial thing here is, like you said, Higgo, are we seeing a greater demand or a lower demand for self-storage? You're going to have to ask yourself, where's the demand coming from and what are the reasons for those demands? So I actually wrote a stock week on that. You can check that out. People are sentimental and people are moving and people need a place to store their goods. So I think there's a demand, and these guys, they are building and acquiring property as if it's going out of fashion any moment now. So they are definitely there on the supply side. And if the demand side keeps up with the supply, they're going to do very well.
Yeah, definitely interesting company to watch. Let us know in the comments what you think of storage and the entire concept of storage. The yields look good, but interesting to watch. Maybe I might just buy a little bit to actually dive deeper in. The next company, Renergen. I mean, we've covered Renergen so many times on this channel. They almost publish a news article every week, but this one was actually an important one, and this was their quarterly update. Before we dive into Renergen, Paul is also starting his own newsletter, part of FinMeUp, to his financial advisor clients. I'm actually one of them, so I'll start receiving them. You can also sign up for that or book a free call with Paul and get some insights on your finances. The link is in the description for that. And also let us know what you think of our new FinMeUp newsletter. We recently covered Advitech, Gemfields, Master Drilling, even Purple Group, all in that newsletter. We're really excited about the newsletter. That's why you can see the passion. But anyway, Renergen, back to a more passion-driven company. Their geological surveys indicated a larger reservoir than initially anticipated. The completion of phase 2 funding due diligence with the US DFC and Standard Bank, they announced construction and commissioning of a lot of more, complex products, or not products, but rather holes where they get LNG and helium from. But it's, if you look at the general update, it seems that there's a lot of progress. If you look at the development, if you look at the building, if you look at them actually now not just developing but producing, it is moving towards, it's moving north. But I think the market is just out of patience. If you look at the one side is interest rates that are extremely high at the moment, and there's even fears that it could go even a little bit higher. So debt is really expensive at the moment. A large portion of their phase 2 funding is from debt, which means they're going to have a lot of interest expenses, which they will have to pay back. That's the one side. The other side is, people have a much lower appetite for high risk investments. That is what we've seen, 2 years ago, 2020, 2021, all high growth stock just went to the moon and back. But that's changed. Now people are looking for positive cash flows, free cash flow, looking for profits, looking for, conservative management teams. And Renergen is unfortunately not in that category. So this is still a company, as we've said before, you need to believe in the management. You need to believe in the product, which is helium and LNG. You need to believe in the long-term theses, because this is not a company you're going to make money overnight. Phase 2 is going to take a few years. So, Renergen, I trimmed a little bit a while ago, but it's still a meaningful position in my portfolio. I'll just continue holding. We'll continue to follow these updates. But, for me, it's not ideal to see the share price falling. But if you're in it for the long term and you believe in the long term, who knows? Patience might show us what we want to see. Any thoughts from your side, Paul?
Yo, you go Renergen. I can talk about this company for probably 2 days. It's an amazing company. I think, like Purple Group, maybe in 10 years' time we'll actually see this company like everywhere. So that's the one thing. But on the other hand, it's taken a massive hit. We are in a recession, and this stock got hyped up a lot. I mean, if I ask people why do you buy Renergen, and they start telling Elon Musk and Jeff Bezos will need helium for the race to the space of their rockets, and I'm like, yo, bro, you are living in 2032 here. It's like, it reminds me of my grandma asking me about Bitcoin 3 years ago. Not to say that it's not amazing. It's just like, wowza. Okay, people are hyping this thing up too much now. But personally, I might actually consider buying Renergen now, because it's fallen so much. Like, people are so negative. They're so impatient. Personally, it's not a bad time for me to maybe start dipping my toes. That's just what I'm doing. At least consider it.
Yeah, well done, Paul. You've stayed on the sidelines while many of us has been taking a beating. But it is looking interesting now. I'm not buying anymore, just sitting on what I have. Speaking about all these other things, Caxton and Sapphire are also fan favorites, just like Renergen for many. Paul interviewed both Charles Botha and Josh Viljoen. Those videos will be live over the next 3 weeks. The one is where we cover Sapbest, and the other one is where we cover Caxton. So stay tuned for that. So make sure you are subscribed to the channel and your notifications are on so you don't miss it. But anyway, thanks for watching. Let us know who you think is going to win the Masters. It's going to be interesting. Have an amazing Easter. We wish you all the best and see you next week. Cheers.